Welcome back to another episode of The Federal Church Presents Better Than Bloomberg. Got a few comments here on the FTX implosion. Saw a couple nice write-ups and zerohedge on it. And this one is entitled, Sequoia Writes Off the Entire $210 million FTX Investment. For those who don't know, FTX is a crypto exchange, and it is currently tanking. It looks like it's tanking the Bitcoin price, but it is also tanking the rest of the market along with it. But again, there might be a little bit of irrationality there, as there are many other Bitcoin exchanges that you can use. You can take your business over to Binance. But this one was a pretty interesting piece from zerohedge, where here are all the other funds that are losing billions in FTX. And FTX is essentially a scam made by, what did zerohedge call them again? It was bank fraud, Sam Bankman-Fried something. Bank run. Oh, Sam Bankman-Fried. That's what he put it as. But this one is pretty entertaining. Slowly but surely, the humiliated investors who do zero homework and merely look at who else has co-invested before they sign the check are coming out admitting that it's gone, all gone. And this one's from Sequoia Capital here. This is a note they sent to their investor. In a tweet late on Wednesday, venture capital giant Sequoia Capital said they had written down the entire value of the stake in FTS. A little over $210 million. So, just almost a little over $500 million. We are in the business of taking risks, Sequoia wrote in a message to investors seen by Bloomberg. Some investments will surprise to the upside, and some will surprise to the downside. Well, surprise. This one was pretty much to the downside. And here's their little write-up of it. This one is kind of fun. Dear Limited Partner, we are reaching out to share an update on our investment in FTX. In recent days, a liquidity crunch has created solvency risk for FTX. Yeah, that's a little bit of an understatement there. Looks like they had some sort of shitcoin, and then people just started dumping the shitcoin because it's a fraud. And again, don't take my word for it. This is not investment advice. You'll have to do your own research into that. Again, do not forget that this is not to be construed as investment advice. Expect to lose all your money from watching this show. The full nature and extent, but back to the letter, the investor letter. The full nature and extent of this risk is not known at this time. Based on our current understanding, we are marking our investment down to nothing, to zero. That's pretty bad. That pretty much just says it's completely worthless, completely toxic. Sequoia Capital's exposure to FTX is limited. We own FTX.com and FTX US and one private fund in their Global Growth Fund 3. FTX is not a top 10 position in the fund, and our $150 million cost basis accounts for less than 3% of the committed capital of the fund. $150 million loss is offset by roughly $7.5 billion in realized and unrealized gains in the same fund, so the fund remains in good shape. Separately, SCGE Fund LP invested $63.5 million in FTX.com and FTX US, representing less than 1% of the SCGE Fund's portfolio as of the third quarter, there. And we are in the business of taking risks, according. Some investments will surprise to the upside, and some will surprise to the downside. We do not take this responsibility lightly and do extensive research and thorough diligence on every investment we make. At the time of our investment in FTX, we ran a rigorous diligence process. In 2021, the year of our investment, FTX generated approximately $1 billion in revenue. why the screen showing up as frozen in here, but I'm sure it's still recording. More than $250 million in operating income that was made public in August 2020. The current situation is developing quickly. I think they mean imploding very quickly. We will communicate in a timely manner when more information is available, and if you want more information, you can contact their representatives over there. Bother getting there. Yeah. So that's pretty entertaining. And back to the zero hedge. And a smaller venture fund, Multicoin, I assume it's a crypto venture fund, told investors Wednesday that about 10% of its assets under management were affected. About 10% of its assets under management are now gone. Fortunately, we were not able to withdraw all of the fund's assets on FTX Multicoin. Get it reviewed by Bloomberg. Yeah, that's reality. A sudden loss of confidence in FTX among customers exposed deep problems with the cryptocurrency exchange. People withdrew money and sold off tokens associated with the company, causing a liquidity crunch. And rival Binance agreed to buy FTX, but after they conducted their due diligence, then decided to pull out over concerns about FTX's financial health. It's obviously toxic. Judging from what I've only read from Zero Hedge. But these are earlier notes from him. Now that the world's largest crypto exchange, Binance, has walked away from the bailout of the world's second largest crypto exchange, FTX, I don't think that's right. I think they were crypto. I don't know how they measured that, but in terms of exchange of volume of say Bitcoin, I don't think FTX is the second largest one. But I might be wrong. But biggest ever crypto fraud, far bigger than Mt. Gox ever was. Here's a list of all the luminary investors whose money in FTX is now gone. All gone. This is actually quite entertaining. We start at the top where we find out the who is who of clueless momentum chasers who over the years somehow got confused with credible, diligent investors. We're talking, of course, about Tiger Global, which is down 55% this year and is about to be down a whole lot more. And of course, the fund that we once dubbed the bubble era short of the century, SoftBank. And here's a twat from Zero Hedge. Can't make this up. Among the January Series C investors in FTX, which valued the Ponzi scheme at $32 billion, the Tiger Global is down 55% year-to-date on SoftBank. One wonders how much of today's widespread selling across various asset classes was due to Tiger Global margin getting called and dumping what it can. Yeah, it probably had to. There are more funds, of course. Third Point and Altimeter Capital Management are among hedge funds that recently participated in funding rounds for Sam Bankman-Fried's once high-flying crypto exchange, Brevin Howard Asset Management's Alan Howard, and the family office of Paul Tudor Jones. Sorry about that one. And Millennium Management founder Izzy Englander also chipped in as angel investors, alongside celebrities including Gisele Buendchen and Tom Brady. There were many others. FTX also attracted capital from the Ontario Teachers Pension Plan. That's screwed over the teachers. Sequoia Capital, Lightspeed Venture Partners, Iconic Capital, Insight Partners, Thoma Bravo, and even Masayoshi Son's SoftBank. So if you've been watching, Silicon Valley, as I've been, those people they go to for money, well, those are essentially ones that lost a shitload of money in this show. Tiger Global and Ontario Teachers first invested in FTX in December 2019 in a funding round that valued the company at $8 billion, according to PitchBook data. Both topped up their wagers in October 21, giving FTX a $25 billion valuation, and did so again in January, the data showed. I don't know how they get to these, ludicrous valuations, especially when you can pretty much take a look at the balance sheet and see the assets of what the exchange actually has. And no, they don't take that much in fees either. Some of the other firms and individuals backed FTX in July 2020 2021 paying cash to participate in the 1 billion funding round that valued the crypto exchange at 18 billion. But for bullet points, here is a list of the most prominent investors in FTX, courtesy of the blog's Frank Shapiro. BlackRock, Ontario Pension Fund, Sequoia, Paradigm, Tiger Global, SoftBank, Circle, Ribbit, Alan Howard, Multicoin, Van Eck, and Temasek all got hosed on the FTX implosion. Remarkably, as ever more clueless, pedigreed investors piled up to fund this fraud of epic proportions, the valuation went super parabolic, and after two early rounds in 2019 and 2020, FTX got its real outside funding in July 2021, when it pocketed $900 million and a valuation of $18 billion in its Series B round. This was followed by two more rounds, most notable of which is the Series C, when its valuation exploded to a staggering $32 billion. How they got that number, I have no idea. It was around this time that scam bankrupt-fraud started naming sports stadiums, and imagine the world in which FTX would buy Goldman. Yeah, that's not going to happen. The chart below is definitive proof that even, or rather especially, the smartest investors do no homework before allocating huge amounts of capital, which is still entertaining. These are how many millions they took, and the valuations they were at. 18 billion here. These aren't thousands of millions. 18 billion here. 25 billion there. I got I have me blocking that one, but it was 32 billion. I think it's in that one. It's ridiculous. So basically, what is that? $1.72 billion just evaporated. Of venture capital money, I mean, all on a Ponzi scheme farce, or fraud, I mean, to use the word farce. But that's kind of how the farce involving me is ending up, so I guess it would be appropriate. All that seems so long ago now that regulators are investigating whether FTX properly handled customer funds. Translation, the firm probably used client funds from its exchange to fund its trading shop, Alameda Research. And that's probably where the Sam Bankman-Fried over there ends up going to jail, because he's commingling funds from the exchanges. Apparently they have different entities. One is in the U.S., some are offshore. And if he's funneling money from that to his trading or somewhat hedge fund type entity, Alameda Research, well, that's where he ends up going to jail. And the firm's relationship with other entities Bankman-Fried controls and concerns raised by Binance executives during their due diligence process could torpedo the deal. This was from previous notes from ZeroHedge, and they already did torpedo the deal. As a result of the FTX collapse, all of the above-named investors, among others, are set to lose all of their invested cash, especially with news such as this hitting the tape. Oh, Jesus Christ, that makes you feel old. There's no more ticker tape, but just showing up on the Bloomberg machine, a terminal. I mean, that's another one to make you old. There's no more Bloomberg machines. There's terminals now. Bankman-Fried told investors FTX has shortfall of up to $8 billion, while it managed to evaporate almost $2 billion of venture capital money. Still, while billions will be lost, nobody will be crushed as much as Bankman-Fried himself, whose personal wealth has collapsed from $16 billion to what may now be a negative number when accounting for his personal debt. Of course, it's all downhill from there, especially once SBF is thrown in prison for stealing billions in client funds in his exchange, and using them not even to buy yachts, but to make catastrophically bad investments. That is pretty funny. And there was also another funny part to it. This one was more recent from ZeroHedge. Bill Ackman tweets, then hurriedly deletes praise for Sam Bankman-Fried after FTX's blow up. Bill, what are you thinking? Things have been going good enough for billionaire Bill Ackman of late. His fund has been weathering the storm and performing decently enough to stay out of the news. And the torrid saga that was once Herbalife is now far off distance in the rearview mirror. Even Ackman's famous Hell is Coming CNBC moment that marked the bottom of the pandemic sell-off the bottom of the pandemic sell-off has mostly been forgotten about, but we guess you can't keep a good man down. Like everybody else in the industry, Ackman made his way over to Twitter earlier this week to weigh in with his opinion on the FTX blow-up. Except instead of criticizing Sam Bankman-Fried, Ackman decided it would be a great time to congratulate him. You give, I guess that's their twiddle, SBF FTX credit for his accountability here. I don't know any of the facts, but I have never before seen a CEO take responsibility as he does here. Well, if he takes responsibility, he would actually cough up the billions of dollars and get vaporized. It reflects well on him and the possibility, but he probably won't do that. It reflects well on him and the possibility of a more favorable outcome for FTX officials. Not when it's a complete fraud. And then it shows this twat. I'm sorry, that's the biggest thing. I fucked up and should have done better. This tweet has been deleted. You have to give Bankman-Fried credit for his accountability here, Ackman wrote. I don't know any of the facts. I just read that out. We're guessing it was only shortly thereafter, as Ackman was being mercilessly ratioed by everyone on FinTwit, that he eventually learned some of the facts of what had taken place with FTX. It's essentially a fraud in the exchange, collapsed worse than Mount Gox. He deleted his tweet shortly thereafter. The problem with Twitter is that it's too easy to tweet, he wrote after deleting his original tweet. The good news is that you can recall the missile before it causes too much collateral damage, Ackman later lamented. Just spitballing here, Bill, but maybe get a grasp on the facts first next time. That is pretty funny. And then there was another write-up from zerohedge entitled, I'm really sorry, again, FTX files for bankruptcy, Sam Bankman-Fried. Apparently he resigns as CEO. But this was pretty hilarious. Bank fraud over there is being replaced with John J. Ray III, the lawyer who helped clean up Enron. Yeah, nothing says you're not a complete fraud than, bringing in people from Enron. And this was what was entertaining, too. Apparently, there are approximately 130 additional affiliated companies, together the FTX Group, that have commenced voluntarily proceedings under Chapter 11 bankruptcy. 130. Get a load of this. And this is what I was mentioning earlier. Don't quote me on it, because I'm just reading off of what zerohedge said. But essentially what it looks like what happened was these Alameda research entities or investment vehicles or hedge funds, I don't know how you ran it, hedge funds or whatnot. And then all the other client funds that come from all these other entities, the ones that are offshore primarily, I think they claim that they weren't commingling funds from the U.S. But all the other offshore entities, they use that money, not to even buy yachts, but just to make bad investments and probably lose money in the Alameda Fund, the Alameda research entities. Oh, wait, where did I go? Oh, I guess he updated. Oh, yeah, he updated the note. Now the title is Binance Blasts, I'm talking about zerohedge. Binance Blasts Rogue Actor Bank Fraud as FTX files for bankruptcy. Well, you don't have to throw a stone too far to find people that are pissed off at Bankman-Fried. Binance strategy chief Patrick Hillman has more than a few choice words for the damn darling crypto once billionaire. This is the direct result of a rogue actor breaking every single basic rule of fiscal responsibility. Hogan said in a statement to the Wall Street Journal. No, it's basically fraud. It's not unlike, I forget who put up the post. Oh no, it was zerohedge. Yeah, MF Global did the same thing except with regular US dollars. Bank fraud over here just did it with cryptocurrency. So he basically pulled a Corzine. So it's not really a rogue actor, but it's pretty standard for these people to do with their fraud stuff. While the rest of the industry operates under an extreme measure of scrutiny, the cult of personality shrouding FTX allowed them a dangerous level of privilege that wasn't earned, he added. Notably, Binance has long complained that it has received more scrutiny, including from the media, than FTX. It probably has. I haven't heard too much about FTX. Back to the note I was reading. Yeah, and here is a flowchart of the 130 entities in their little fraud here. So you get to see the level of the sophistication of the fraud. It's just entertaining to me. The company listed between 10 and 50 billion in assets and liabilities, spread amongst 100,000 plus creditors. How the hell did that happen? Get a load of this. Get a load of this filing. So this is the Alameda research part that I was talking about. More than 100,000 creditors. I'm guessing those are the client funds that they commingled and decided to essentially rip off. So entities tied to FTX.com, FTS US, and trading firm Alameda Research Limited were part of the filings. According to a TWED press statement Friday, Chapter 11 bankruptcy lets a company continue operating while it works out a plan to repay creditors. And here is them bullshitting with the press release. I don't bother reading that. And yeah. I mean, when you have somebody from Enron coming over, I mean, they're pretty much just as guilty as it is. I don't know why they thought that was a good idea. But this fucker, the news sparked the latest bout of selling in crypto, which is back under 17,000 US dollars, unable to stage even a modest bounce amongst the relentless negative news flow. I guess we can take a look at that too. Not talking about the shitcoin with Bitcoin price. Yeah, it's at 16.9. It is still under 17,000 as of this recording. And the FTX token or whatever shitcoin they had, which is probably just a complete Ponzi scheme, is headed basically to zero. It's trading at 240 now, but yeah, that'll probably go to zero. Especially with no exchange in which to trade it. And here is a twat from bank fraud. Today I filed FTX, FTX US, and Alameda for voluntary Chapter 11 proceedings in the US. I'm really sorry again that we ended up here. If you were sorry, you'd be paying for it. Hopefully things can find a way to recover. Hopefully this can bring some amount of transparency, trust, and governance to them. Ultimately, hopefully it can be better for customers. This doesn't necessarily have to mean the end for the companies or their, it does, what delusion, or their ability to provide value and funds to their customers cheaply, and can be consistent with other routes. Ultimately, I'm optimistic that Mr. Ray and others can help provide whatever is best. I'm going to work on giving clarity on where things are in terms of user recovery ASAP. It was pretty clear your shit's worth nothing. I'm piecing together all of the details, but I was shocked to see things unravel the way they did earlier this week. I will soon write up a more complete post on the play-by-play, but I want to make sure that I get it right when I do. Apologies and hope don't pay the bills or pay these guys back, Sammy boy. Oh, here's an entertaining graphic again. Here's everyone that lost money to FTX. Oh. I guess they don't have it anymore. I don't know what that twat fest was, but I'm shooting via at Mini Grogu. Oh, look at that. That's a little bit more than that. Oh, I'm guessing it breaks down that 2 billion that just evaporated that I was just talking about. Just thought that was entertaining. And here is the actual FTX website too. Well, FTX Europe. It had a pretty funny whatever it was on there. Oh, there it is. Following recent events, please be informed that all onboarding of new clients, deposits, and withdrawals has been suspended until further notice. Yeah, pretty sure they're done. All onboarding of new clients has been suspended until further notice. We have reached an agreement with Tron to establish a special facility to allow holders of TRX, I don't know what Tron is, but it just sounds funny, huh? And whatever these shitcoins are. Functionality will be to external wallets. This functionality will be enabled at 18:30 UTC, November 10th, 2020, which I guess is yesterday. Yeah. So, like I was saying, you probably don't want to put anything on this exchange, but there are plenty of other Bitcoin or crypto exchanges to use. I would use Binance if I were you. But that'll be it for this episode of The Federal Church Presents Better Than Bloomberg.